Tuesday, January 12th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at some books that I highly recommend about the Federal Reserve, about central banking, and why there will never be free markets or a fair and sound monetary system with central banks. Central banks are the problem. They are the underlying problem of the whole economic, political, social system. The melding of private business with government has led to that, because central banks only survive as a monopoly because they're given legal power by government. And before I do that, though, and go over the books that I recommend, we're going to look at where the markets are this morning. I have noticed, of course, that the bond market is continuing to look a little bit, how can I say, precarious in terms of price. I saw there was a record auction in terms of size that they offered yesterday. I think it was a 3-year note, and it went well. And I think they prepped the market. They goosed up a little bit the dollar. They went after gold and silver just to get that auction through. Yes, they have to do that. They have to attract foreigners to buy treasuries. They can't just have the Fed monetizing everything. I think the Wall Street banks, they're holding a lot of paper already. They need to make it attractive to sucker people in. I don't think they will succeed, but let's just quickly look here at the 10-year note yield. And it's we're already at 115, and we've broken some key resistance here around 1% already. This is a monthly chart, so it's a bit more long-term, just to show you how important the level around 135 or 140 is. You can see here the low from July 2016 was around 133, 132 there. And then if you go back further, let's see, into 2012, July 2012 as well, there is an important low at 140. So these are really important levels. Yes, we're still relatively far away, but the way the bond markets have been moving, especially in the last year or so in terms of volatility, we could be there before the week's end. And just wanted to show you as well, if you go back here to the top, in October of 2018, the top was just around 3.25% yield. And that was kind of like a double top with the January 2014 high there, around 305, even though, yeah, we went a little further in 2018, but it does look like a double top. That was around the time when the stock market was really under pressure, and the Federal Reserve had to start reversing everything. They had to eventually stop the unwinding of the balance sheet. They had to start helping or bailing out the repo market 9 months later in September. So, and then they started QE again earlier in 2020. They basically really started QE back in 2019, but they said it was not really QE because it was just to help the repo market. But it's going to be very interesting to see if they lose control of this. A lot of people, of course, are saying that this is a reflation trade, that it's showing signs that the economy will do well. That's Wall Street. They're trying to keep the same game going. I think what we're going to get is massive stagflation. We're going to see commodities take off. And I saw Goldman Sachs saying oil is going to 65. They were also talking about buying ExxonMobil, old Standard Oil. I was looking at that a few weeks ago. It has a really high yield. It's probably dropped a little bit. It was over 8%. But what I think this is going to mean is the debasement of the currency, because the Federal Reserve, as we know, they're going to try to keep short-term rates, well, they can do it, at zero up until at least 2024. And I would say that they would probably try to do that for much longer. They can't afford to taper or anything, the Federal Reserve. They're just doing management of perception. As I've said before, they come out with these statements just to try to control the market. But I think it's getting very interesting. I think commodities, yeah, they're still highly undervalued, and they haven't even started with their move higher. What about for the stock market? I don't really want to know too much about the stock market. I think the mining stocks are going to do well, and commodities, no matter what happens. They're going to keep inflating. We're going to see trillions and trillions come down the pike in terms of monetary and fiscal stimulus. I don't think it would have mattered much who was in power, to be honest. Look at how much the debt has increased in the last 4 years. So it doesn't really matter who's in power. All you need to know is that it's going to get even tougher for the general public. Wall Street and the 1%, or the people maybe even a little below the 1%, they're going to do fine because they can protect themselves. They will be actually doing really well because well, unless, of course, they stay too much into the paper market, stocks and bonds. You wouldn't believe how many people out there still think that there is deflation and that the 10-year yield is going to go negative. Anyway, let's look at where the markets are and then get to our books here about the Federal Reserve. So it's 8:40 a.m. London time. Yeah, Billy, he was fast asleep. I just left him this morning. He's all right. Don't worry. We got spot gold 1856. It's up about $13. It's up 0.75%. The high has been 1862. The low 1838. Silver this morning is actually doing really well. It's turned around quite a bit. It's up 1.7%. We're at 25.34. It's been as high as 25.55. So it's up 42 cents. The low's been 24.86. The stock market not doing really well lately. And this morning we're up only 33 points in the Dow future. We're up 4 points in the S&P and up 28 in the NASDAQ futures. The dollar, yes, it has rebounded a bit, but I think it's a counter trend rally. I think the Fed is going to keep pumping the money out there, or the reserves, which are really money. That's the thing. When the Federal Reserve does QE, it's not a swap. I hear that a lot. And it's really annoying that people are saying that the Fed is swapping with the commercial banks. They're not. A swap is a derivative. A derivative is off balance sheet. No, the Federal Reserve is buying securities from the primary dealers. They're not swapping. If they were swapping, their balance sheet wouldn't be going up. And what they're exchanging is reserves for assets. Reserves are really money. The reason they call it reserves is because any money that is within the commercial banking system and the Federal Reserve, the central bank, is called reserves. But once those reserves are sent to clients of commercial banks, be it hedge funds, mutual funds, that's money, right? But yeah, those people who say that QE is deflationary, they're doing people, the public, a great disservice. And to call it a swap, I highly recommend people watch Best Evidence and John Titus. He explains that exactly in, I think it was, if not his last video, but the one before his last video. He explains it a lot better than I do, and he's focused just on that in that video. So yeah, when you hear people saying that the Fed is swapping, No, they're not. Not with commercial banks. They do have a swap line with other central banks, and that I agree. It's off balance sheet. And what's that one all about? Well, it's to help foreign central banks when they don't have enough dollars. The foreign central banks just create, let's say, pounds out of thin air. They swap those pounds with the Fed for dollars, and those are probably swapped forward. That means that let's say it's a future. That's what they do. But it doesn't go in on the Bank of England's or on the Fed's balance sheet. But that's totally different than QE. Just wanted to put that out there. It's really frustrating to see people talking about QE as a swap. So let's continue. I got that out of my system. So the fiat currencies, the pound is up 0.25% at 135.48. The euro is up 0.1% at 121.63. Japanese yen is unchanged, or the dollar versus the Japanese yen is unchanged. The dollar is at 104.20 in terms of yen. The dollar is down 0.25% versus the Chinese currency at 646, the yuan. Commodities are back up a little bit. Copper is up 1.3%. WTI crude is up just under 1% at 52.63. So now to the Fed. Just have a sip of my coffee here. Clear my throat a little bit after that rant about swaps. So if you look at the Communist Manifesto, the 10 planks of the Communist Manifesto, and I just recommend you Google 10 planks of the Communist Manifesto. I'm not going to put the whole thing up, but you will see that one of them is centralization of money and credit under the control of the state. And that's what a central bank is. I listened to Gerald Celente yesterday. He was interviewed by Daniela Camboni of Stansberry Research. And he got very emotional, and I can understand why. It's getting very frustrating, especially here in the UK. And unfortunately, I think it's going to be the same in the US. They're talking in the UK here of only allowing people to go out once a week. They've put that out there on the mainstream. And believe me, these things seem outrageous, but they've been doing that for the last almost year, putting things out there that seem outrageous that become true. So yeah, it's enraging, but I think we need to keep calm and do the best we can to not let them really enslave us up here. And I think that's the only thing we can do. We can't fall into their trap to get angry and get in trouble, because then they can really come after you, as you saw a few days ago. So yes, without the state, central banks cannot have a monopoly, because it's the state that legislates the central bank. It's like the state or the government, the legislature, legislating a monopoly for airlines and having only one national airline, no competition. I mean, is that what we really want? We know central planning doesn't work, and but the communists, they love that, and we know that that's failed in the past. Some people will say that the Soviet communism was different, that real communism won't fail. But I'm sorry, anything that's centrally planned doesn't work. The granddaddy, even though I think the Swedish central bank started out a little bit before, but the granddaddy of all the central banks is the Bank of England, founded in 1694. So yeah, I think the Federal Reserve is just the foreign arm, or the North American arm of the Bank of England. And you're gonna say, what are you talking about? Well, I'll come to that when I'll show you the books, and you will see. And yes, much like the Council on Foreign Relations is the foreign policy arm of the Royal Institute for International Affairs, or Chatham House. Some people think the British Empire is finished, but watch the Second British Empire. There is a really good documentary about that, Spider's Web, and the City of London. So I think the bankers are in charge, unfortunately. And as I was saying about Gerald Celente, I went off track there a little bit. He said that with Janet Yellen coming in as the Secretary of the Treasury, it's basically the Federal Reserve taking over the government, and I don't disagree with him. They've been in charge anyway forever. The guy who advised President Obama in his first term on his cabinet was an executive from Citigroup. Citigroup, who had been just bailed out a few months before Obama came to power. So the bankers are really in control, and I think these books will help you learn what it's really all about and who's really behind these institutions, who's really running your government. It's not really your government anymore if they're running it. So the first one is The Secrets of the Federal Reserve by Eustace Mullins. There you go. Not sure how easy it is to find this book and how much it costs, but it's a classic. It's really the original book about the Federal Reserve. Some people think it's The Creature from Jekyll Island by G. Edward Griffin, which is a great book. But this came out a lot longer before, much before this one. The other one that I really like is by Ron Paul and the Fed. There you go. And this one here, The Tower of Basel, or Tower of Basel by Adam Lebor, The Shadowy History of the Secret Bank That Runs the World. So that's the bank about the Bank for International Settlements. Highly recommend this. It shows you how the Bank of England is an integral part of the whole central banking scheme, and also really powerful within the BIS, which is actually the central bank's banker. So some people, when they think of cartels, they think of OPEC. They think, oh, those Arabs, they want to control the oil price. But I think the central banking cartel has been going on for a lot longer. And yeah, it's much worse than the oil cartel or OPEC, because it controls the money. The money should be just like any other commodity. It should be set. The price of it should be set in the free market. What's the price of money? Well, it's the interest rate, of course. A great book to show you the power of finance, especially the City of London, is The Empire of the City, The Secret History of British Financial Power by E.C. Knuth or Knuth. There you go. Not a very long book. I'll put a link below with the names of all these books, the titles of all these books, and the authors, if you want to find it. And just before I finish, a lot of people might be saying, what are you talking about? Wall Street's in charge. But did you know that JP Morgan, the bank, actually has its origins in the City of London? There used to be a banker, American banker called George Peabody. I think he came from Baltimore, and then he set up business in London in the 1830s or 40s. And he didn't have any sons, so one of his friends sent his son over to work, to be a partner eventually with George Peabody, and that was Junius Morgan. And then Junius Morgan's son, J.P. Morgan, took over when Peabody died. But the original J.P. Morgan originated from the Peabody Bank in London. So very powerful place, the City of London. A lot of people know that the City of London is really like sovereign. It's been since William the Conqueror came over in 1066. So the City of London is sovereign. It's not really part of the UK. So yeah, have a look at those books. Highly recommend them. It shows you how really these banks, central banks, and whoever is in charge of these central banks, and I would say they're very powerful families. They're families who own the private banks or commercial banks that have stock holdings in the regional Federal Reserve banks. They're the ones who control the nominations of let's say governors of the Bank of England, Federal Reserve chairman, Treasury secretaries. So they're really in charge. They're controlling everything. And like Gerald Celente said, Janet Yellen is just going to be running the government. And she's ex-Federal Reserve chairwoman, of course. So there you go. No free market really with central banks. For me, that's really the big problem, and that's why I focus on this. Sometimes, yes, I talk about what's going on out there, but all I can see is more division amongst the public, and all that does is give more power to these people because they want you divided because we're fighting each other instead of like pointing the finger at the real culprits. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. I wish you all a great day. Take care. Bye.